All right. Think we're live. Yep. So thanks everybody for joining us here. This is Dan Reecer. I'm here with Bette Chen, one of our co-founders. It's great to be back. Yeah, I think a lot of you must have joined us, what was it, a week or two ago for another conversation. And we're going to kind of come back this time and have a discussion around the aUSD stablecoin, the kUSD stablecoin, kind of a high-level discussion around some of the future direction of both of these parachains that we're running and operating now. Betty's going to give some background on that, as well as some details as far as some of the things we're thinking about with next steps with both Karura and Acala. So maybe Bette, do you want to introduce yourself real quick, and then we can get into the discussion?
Yeah, definitely. So yeah, hi everyone. Bette here, calling in from New Zealand. I'm one of the co-founders. I've been building Acala for the last wee while. Yeah, so happy to be here.
Awesome. Yeah, and I'm Dan Reecer, leading our growth team at Acala, so focusing on a lot of things across community and marketing and growth in general. So today, like I said, we're going to be talking specifically about our stablecoin product. This product, actually, many of you know, first launched on Karura in the form of kUSD. What many people may not quite realize is that the same protocol is actually being used for kUSD and aUSD. Some things were slightly different in terms of the collaterals that were accepted to mint those stablecoins, some of the risk parameters, and obviously the ticker symbol. So kUSD being the Karura stablecoin, and aUSD being the stablecoin on Acala that just recently went live within the past 2 or 3 weeks. So maybe Bette, if you can give us some background on kind of how everything got started. I know a lot of what you guys did 3 years ago was centered around the stablecoin, and you kind of built this ecosystem around that. So maybe just walk everyone through the thought process there and where we are today.
Yeah, I think it's important to set the context of the Polkadot and also Kusama ecosystem, because what Polkadot has been building is actually categorically different. I think we should also clear some myth of how the Polkadot ecosystem evolved versus, I guess, some other type of ecosystem. I think the most common sort of ecosystem right now is the generic blockchain that's got EVM built on top of it. That obviously has been very, very popular, just sees how much demand there is for this type of solution. And then what Polkadot is trying to build is certainly not very much a generic platform. It's actually built a network of individual blockchains that are connected together. And then on the Polkadot's parachain or blockchain networks, many of the chains are like Acala. We are application-specific blockchain. So we're not generalized per se, but there are also generalized platforms like Moonbeam, A-Star, that they have EVM and other type of virtual machines on top of them, open for any type of application. But many other sort of parachains in the ecosystem, like Acala, we're very much focused on the very low-level stablecoin infrastructure, providing a lending sort of protocol, which I'll explain further why this is a necessary base layer before we can bootstrap anything else. And then other parachains are more focused on like privacy, as well as DEXers, money markets, etc. And also further along, there will be other type of like supply chain and also metaverse and things like that. And the way that we actually see this is it's gonna be bootstrapped in a very different time scale and in a different way, because if you go the easy route, right, you just copy and paste an EVM chain, you just need to focus on your own chain. And then you just chuck everything that's already out there. And then on that particular machine, then you've got an ecosystem. So that doesn't actually require a lot of extra, I guess, work and innovation. And that's already been proven to be working. So that's one type of way that you can go about building solutions. And then obviously on the Polkadot sort of ecosystem, we sort of like all go into the direction of Web3, which is having a web all connected blockchains that are probably specifically doing certain things. So when we bootstrap, then it's not just bootstrapping Acala, then we'll be successful, right? We actually rely on this other chain that are utilizing the product and services that we provide. And then if they actually proliferate, and then we will do really well. And then this other parachain, and they probably rely on some other parachains building some other dApps that use their product and services, and then that actually goes into helping the entire ecosystem to grow. So almost like in the very early days, when we first have EVM, because it's categorically different than Bitcoin, it took 6 years for the first few protocols on Ethereum to actually bootstrap itself, because one is built product and services. It only becomes useful when some other protocols build on top of it, and then one after another. And then that actually obviously has been brought into a categorically different architecture here in Polkadot. Is when you bootstrap, you no longer just bootstrap within your chain. So that's why you can see both on Kusama and Polkadot, even when parachain launches, things are actually quite slow because you're not actually waiting for things happening just on your chain. Even everything turn on your chain, we still rely on other parachains to kind of like bootstrap, and then the whole ecosystem can grow. However, once you go through the initial liquidity bootstrap period that I was talking about as multi-chain bootstrap period, then the effect will be exponential. So imagine, you're going to have 20, 30, 50 different chains, all with different ecosystems, all happening, all at the same time. Then all of a sudden, the boom will be way bigger scale than what we currently have. And also it's going to be very diverse, because your transactions is going to be scalable onto various different blockchains, taking care of different type of businesses, industry applications, etc. Right? So that's the way that it can actually scale and actually do useful work. But of course, in order to get there, the beginning stage, which is where we currently at, is the current stage is the hardest part, is actually get started. We're really putting the oil into the engine that we've built, and then collaborating amongst the parachains that we can leverage each other's product and services and kickstart it. And this also come back to where Acala is at, right? So we were one of the first projects in the ecosystem, and there's a reason that we are tasked to build a stablecoin. So let me explain. You can, nowadays you can just mint stablecoin if you're USDC or some other type of stablecoin, but that's not what we are here trying to do. What we are here trying to do is to release liquidity of the digital gold or reserve assets like DOT, like KSM, like any parachain assets in the DOT-Sama ecosystem. So what does that mean? So as you can see today, the Polkadot and Kusama ecosystem, there are two main activities or use cases for the tokens. One is obviously staking, right? So that provides security for two networks. And then the second is crowd loan, right? So that provides a market sort of competition way to get chains earning a slot to share those security. However, if we only locking the tokens into those two sort of use cases without circulating them in the economy, you will not see economic growth, right? Economic growth is not relied on how much gold you actually have. It actually relies on how much value or liquidity, if you like dollars, that you can generate from those gold that you sit on. And then that can actually circulate in the entire DOT-Sama ecosystem and inherently generate activities, more products and services, more dApp, and then more use cases, and then it actually bootstrap the economy. So I guess in real life, $1 can actually circulate in the economy for $2 or $3 or more. Well, of course, if you generate that much dollar and then you are wasting them, that's one side of the story. But if you're actually deploying them on chain and then helping the protocols, dApps to actually build more useful products and services, then that's another thing to actually help build the economy. So we are right at the very, very beginning of that. Like right now we only have the reserve assets like ACA, KR, DOT, and also KSM. They are the reserve assets, right? You can use them as collateral. And then to generate liquidity. This is where the power of you can hold on to those reserve assets, but you can extract liquidity out. With this liquidity, right now in the form of dollars, then you can access product and services and also a range of sort of new opportunities and also participate in various different type of services, right? And this is also why right now for the Acala team, we're very, very much focused on building the aUSD centric economy and also ecosystem. And this ecosystem will look different because it will not only just focus on dApps integrate with aUSD on Acala itself, on Acala's EVM Plus, which, by the way, about to open the public testnet. So if you're interested, there's a Discord channel that you can go to and look for information there soon. And so that's not just constrained on our chain, but also other parachains that integrate and build aUSD is also part of the ecosystem. This is like what we are focused and also trying to sort of achieve and help all of us in the Summer ecosystem to get through the first inertia, which is bootstrapping a multi-chain ecosystem together. So I'll just, I probably will stop there in terms of the Polkadot and Kusama context and why we actually built this stablecoin there first.
Yeah, that's helpful. A couple things that I thought of that I just wanted to add to that. A lot of people, I mean, us included, we all want this to move as quickly as possible. But although Polkadot's been around for, I think now about 1.5 years, one thing that we all need to remember is that these parachains, including Acala, started launching on December 18th. So Polkadot, in my opinion, is about 2 months old. These parachains are still getting up and running. So anyone here is kind of lucky to be seeing Polkadot starting from its infancy. And over the next year, 2 years, 3 years, this is all going to really come to fruition. The cross-chain DeFi ecosystem, infrastructure like stablecoins. I know a lot of people, if you're into DeFi, you're used to using things like bridges, where you can do something on one chain and then use this really clunky bridge, go to another chain and use other DeFi applications over there. Again, isolated to one chain. Where we're headed is multi-chain DeFi with no bridging. There's native cross-chain ability between all these parachains connected to Polkadot, without the need to trust people and to trust bridges. It's all natively trustless. So this is where we're headed, but what we're talking about here is kind of laying that foundation with necessary components like decentralized, keyword decentralized stablecoins to set the foundation for the whole Polkadot and Kusama ecosystem. So Bette, you mentioned how our focus for this year and for the foreseeable future is on growing the utility and growing the liquidity of aUSD as a stablecoin. A lot of people know that we did, of course, and still are sitting on two different stablecoin protocols. We have aUSD and kUSD. Can you just talk about like the current state of affairs, maybe the challenges that come with running two stablecoins and just the current kind of situation between Acala and Karura and that relationship?
Yeah, definitely. So we've launched Karura for quite a while. I think that is the challenge of being the first. As I mentioned, in order to bootstrap, you actually need to bootstrap the whole parachain ecosystem, like be able to connect, collaborate, and then have tokens, import and export between the parachains, and also need a few of them to actually bootstrap. So even for Karura, who has been launched for 5 or 6 months now, we are still very early in terms of parachain ecosystem. We only now have, I think, integrated with 2, probably almost 3 parachains, like app-specific parachains. So you're almost talking about we only have 3 dApps that's been integrated with kUSD. So still very early. We do have like 20 others on the list, but certainly not as fast as we expect. But this is like slowly but surely happening in the Karura ecosystem, or the Kusama ecosystem, if you like. So always, like the stablecoin is basically one protocol, right? As you can see, both on Karura and also Acala, they're exactly the same protocol, but with slightly different risk parameters being set for different type of assets on the two chains. But they're essentially one type of stablecoin. So there's no reason why there's actually two different stablecoin, apart from the technical prerequisite or the technical requirement that we had to launch on Kusama first. And then we have to launch on Acala later. And obviously that when you have two separate world of economy, your liquidity, your activity is all separate in two worlds. We always had in our mind at some point the economic side of it is going to be connected between the two worlds. I think now we are coming a lot closer. Before we are only more sort of theorizing how we can do that, but now we are so close that we can actually see a clear implementation path, how we can connect the two economies together and then probably unite the two stablecoin protocol together, so we can go in and supply aUSD liquidity everywhere around the .sama ecosystem, right? So I'll stop there and we can, for you to ask more questions.
Awesome.
Yeah.
So maybe on the stablecoin, go into a little bit more detail around the fragmentation that we are currently existing, and then other ways that we could potentially improve or bring the two ecosystems more closely together. I know there's been some discussions around governance and treasury. So
yeah, definitely. So I think the fragmentation is arbitrary. so it's basically because like some technical dependency we had to launch on one chain that we kind of arbitrarily created, these two different stable coin. So there's no reason that why we can't just unite them and then just have one Acala Dollar or aUSD that serve both Polkadot and Kusama, and actually beyond, right? Because if you actually think about that, this one stablecoin is going to be trustlessly travel amongst, not only just 100 parachains on Polkadot, but 200 parachains on both Polkadot and Kusama. And with Polkadot's scalability, you can actually have multiple, kind of infinite number of relay chains as well. So as Gavin pointed out, down the track, there is going to be tens of thousands of parachains like connected by relay chain networks, right, all together. So this aUSD is going to be that native trustless stablecoin across tens of thousands of parachains. That's when we talk about like scalability for this stablecoin that can serve all of those parachains as the base layer liquidity. So that's one side of the story. And then the other side of the story is right now you can look at DOT, KSM, AC, and KR. Essentially, those are your gold, right? You use them to mint dollars, right? It's only because we are so early in the ecosystem. We have one trading venue, which is on Acala. Well, of course, we're going to have the second one through Tapio, still on Acala. But hopefully, we're going to have folks like Hydro and even Menta and other networks. They're going to have trading venues in multiple chains. And we're also branching out to other consensus systems and also centralized exchanges as well, anywhere with trading venues for the assets. So the Acala Dollar is going to flow across in many, many directions. So right now, those four assets are your kind of like digital gold that you can draw liquidity directly from, right? And then going forward is always our goal to actually serve all the parachain ecosystem. So essentially, you can think about if you are Treasury, right? Or if you're holding funds in those assets, why would you actually sell your assets to fund projects, to participate in certain activities or getting access to yield, while you know that in the longer term you want to hold on to these assets, right? So this is where the Acala Dollar comes in. It's a lever, right? So you collateralize or you store your your base assets or your reserve asset, and you can draw stable liquidity out of it, and then you can access all of those products and services that is going to be built within the whole parachain ecosystem, right? Not constrained on Acala or not constrained on one or the other chain. So this is another side of the scalability, is how you can scale liquidity. And also the reserve asset doesn't necessarily limited to those 4 assets. So we are looking to actually add other parachain assets. So for example, if you hold other parachain assets, if you're a treasury or if you're a fund or if you're individual, then you can also do the same thing of drawing liquidity from it and then fund activities within that parachain or cross-chain as well. So this is how the aUSD is kind of structured and designed to kind of like scale and serve every parachain. And of course, we are at the very, very sort of the beginning of that journey. And so we are seeing then uniting the aUSD and kUSD so that becomes, one stable coin. Not only it's gonna very, very dramatically unite all the liquidity, which it should be, right? There's no reason why we should fragment the liquidity, but also be able to very actively support all the parachains out there, like inject, for example, aUSD into various different pools, inject into like lending protocols, and then support utility onto different sort of applications as well. So that is sort of the landscape that we are dealing with. And then, of course, like to see things to happen, not only the kUSD, can upgrade, but also I think Karura then as a sovereign chain can participate in the entire protocol management on Acala. So sitting on the financial council there to collaboratively manage the financial risk, and also probably should play a big part in terms of sort of the technical verification there, because Karura always served the technical sort of test bed for Acala, while Acala now using the stablecoin and serving the 2 economy should have economic drive, because on Acala and Polkadot it has a much bigger market cap and market potential to serve more users there, to have economic overflow over to the Kusama ecosystem or the Karura ecosystem. So that will be sort of the way that it will probably pan out down the track. Yeah, will be favorable to both ecosystems.
Awesome. Let's maybe stop for a second and ask, I'll ask you a couple questions from the YouTube comments here.
Cool.
We've had a few people ask about other decentralized stablecoins. So I was thinking if you could explain why it's important that the native Polkadot and Kusama stablecoin is a substrate based or something built with the native language that is used to build on Polkadot versus something from another ecosystem that may be compatible but not native to these parachains.
Yeah, so first to start off, the aUSD is going to be Substrate and ERC20 compatible, right? So then the product of it, the aUSD, is going to be able to flow freely across any Substrate chains. Even you don't have EVM, you can take aUSD and then use that as liquidity, and then any dApps built on top of your parachain can use that as well. And aUSD also exists as a standard ERC20, so which means it can flow across to any Substrate chain that's got EVM, and it can also flow out of Polkadot, right? So which means your Polkadot asset, now the liquidity derived from your Polkadot asset can go cross-chain. It can go to Solana, it can go to Ethereum, and anywhere that it can reach for trading or any other stuff that you can do with it. So this is one side of the story. It's important that we can do that, right? So you can only do that if you build a palette and then integrate natively for it, so you can flow across at least within .sama as trustlessly. And then the other side is the reserve asset. So our goal is right now it already supports KSM, ACAKR as reserve assets. And then it will also be able to support other parachains asset, right? Parachains that their token is in ERC20 form or in native substrate form. So we can do both. for stablecoin. So this is also very important that we serve any type of the .sama assets, right? So then it makes it really native to the Polkadot ecosystem and really can reach the scale, right? And certainly, well, you guys know we have an EVM Plus on Acala, right? So we expect there are actually going to be other stablecoin deployed on top of the aUSD. Some of them might use aUSD as collateral, right? Some of them might just build their own. And then they will exist in the EVM Plus, right? So this is like very different from, as a lower level of stablecoin, and then be able to serve the purpose of extract liquidity and travel natively across the entire .sama ecosystem and beyond. So those are the few things that on the surface, why we need to build it at a pallet. And there's a more economic and technical reason why we build it as pallet. So I'll go into a little bit of that, but not too much. Hopefully it's not too boring. So technically or economically, I think, well, the stablecoin we chose, the mechanism is multiple collateral and also over collateralization stablecoin, algorithmic, right? And we chose that because we were the first, so we are lowest level. So it's better to choose something that's very solid, stable, and especially in a downturn that it can actually survive itself. And it actually becomes stronger when it's a market downturn, right? Otherwise, everything built on top of you is going to collapse if you're building a building on sand rather than concrete, right? So this was the design choice we make because we know we're going to be the lowest level. And then we're also very conscious that we're not going to be the only this type of lending protocol. There will be others built on top of us, right? So we chose the most solid sort of type of and safest type of form of stablecoin. There will be others, right? There will be more, I guess, if you're not using collateral, you can use other type of algorithmic stablecoin, but you probably optimize for yield, and at the same time, probably also increasing dramatically your risk. But that's all good experiments, right? There will be a lot of those. But as for a foundational sort of instrument like piece that as a building block, then we chose a very solid one that we can serve the entire ecosystem. And then so when we built that mechanism, and a couple of things very important. Number one, how we deal with liquidation. So right now on any other EVM-based collateral or any stablecoin that use liquidation, even non-collateral, you use liquidation as well. They are off-chain. I don't know how many of you know. They use keepers, right? The name keeper sounds really good, but it's actually off-chain. They're servers running by people that have to monitor the on-chain state of each loan. If the loan becomes dangerous or just the stablecoin becomes dangerous, then the server actually sends a transaction on-chain. And if usually when you do that, when you need to liquidate is when the price drops sharply, right? And usually you get into a situation where the network is very congested when the price drops because there's so many liquidation happen, and you couldn't do that very efficiently. This is also the Black Thursday that happened previously on Ethereum, right? So what we were doing on Acala side is our liquidation is on chain, so we don't have that problem. There's no one needs to run the server and then monitor the health of the stablecoin. So everything happens on chain, and this is you can only do that with a pallet, with building something at the substrate level. So that's one thing. I won't go into even further than that. And then the second thing is Oracle. For the Black Thursday event, another reason for that to happen is Oracle price is kind of like cannot be updated efficiently, also because it's congested. So on the Acala stablecoin protocol, then our Oracle has a quality of service. So quality of service, simply put, is when you're looking at the stream, right? This YouTube streaming, you can see Dan and me talking very smoothly because your internet provider prioritize video streams because it has a bigger effect of your experience with the computer. And you'll probably not even notice your email coming in 3 seconds late, right? This is how internet prioritize all the internet traffic on your computer. So we can do the same for our traffic on the Acala chain. So Oracle transaction is prioritized on the Acala network so that it can serve the risk management for the Acala stablecoin. So we've never run into a situation of, oh, the network is full, we can't update the price. So that's always been updated efficiently. So that also only possible if you build at the pallet or substrate level. And then again, these two are the ones that we identify most critical, and then we've learned from the past. But I'm sure there will be other events as there are different factors affect the way that we are doing, the stable coin, and also the market reacts, and also the number of users participate. But the good thing is we can upgrade faultlessly with the structure we have, and then also build new mechanisms into it. And this is also why we chose to build at the pallet and substrate level. So it's timeless solution essentially. So I hope that helps.
Awesome. So I'm going to share my screen just for this this slide, and we can get into maybe some of the solutions around some of the current kind of challenges that you walked us through before. So yeah, go ahead and walk us through the proposal that we're thinking about. For people on the YouTube right now, what we're trying to do is get everyone's feedback on this proposal for a way to bring Karura and Acala more closely together. And as you can see here on the slide, part of that is actually uniting aUSD and kUSD into one stablecoin. aUSD to serve both the Polkadot and the Kusama ecosystem and every parachain on that and every dApp on those parachains. This graphic hopefully kind of illustrates that, but Bette, if you want to maybe talk about what this means and then how exactly this would actually work and what it means to users and even developers.
Yeah, so I think I had an analogy for Karura and Acala a while ago. Is like Karura is the small boat, and then Acala is the bigger boat, and then underneath is how much issuance, liquidity, and then if that we can do well, and the two network will go up all together, right? So when I said that, I don't just mean figuratively, like as an analogy, but actually it could happen in ways of Karura continue to be the technical sort of intrinsic value for Acala, but then Acala can use its the aUSD uniting the kUSD. Basically, your kUSD will be upgrading to become aUSD, and then we can collectively provide liquidity into the Polkadot as well as Kusama ecosystem. And then the more liquidity on these two networks, and not just on the Acala and Karura network, but also on all the other parachains and the dApps that integrate with Acala, the aUSD stablecoin, then it's basically the ocean is going to go up. The ocean, once the ocean go up, then your two boats, small boat and big boat, is going to go up at the same time, right? So once there's more liquidity, more places, more trading venues, more places and dApps using the aUSD, then essentially, you're creating more value out of the entire ecosystem. Then more valuable your DOT, your KSM, ACA, KR as reserve assets, because the more residual or derivative value that it generates for the entire ecosystem. And then other parachains becomes very successful because we can help them with liquidity and they have more users. They become more successful, and in turn, we become more successful because there will be more issuance of aUSD, and then that also helps the underneath reserve assets as well to derive more value. So this becomes a very virtuous cycle to connect not just Acala and Karura in terms of economics, but also connects the entire Sama ecosystem together as one. So yeah.
Yeah, could you maybe expand on how this would actually work? And some people are in the chat are asking, for example, like what happens if I have a kUSD LP position, or what happens if I'm holding kUSD? what will that look like for a user when if this upgrade is voted on by the community, and if that happens, would there be any action on the part of any users, or what would that look like?
Yeah. So this is not gonna happen like tomorrow, right? So this is so for one is like we need to kind of align in terms of where we see the two economy goes, and then the second is technically these are all able to be implemented. So the way that it will happen is the prerequisite is bridge. So essentially, you have two places that you've got the stablecoin, right? So once the kUSD upgraded to aUSD, so the symbol will be from kUSD to aUSD. So essentially, you almost, as users, you almost need to do nothing, and your pairs or your holdings will just become aUSD. And then aUSD will trade at exactly the same one-to-one to your original kUSD, right? So they're one-to-one. But that can only happen once there's a bridge, right? Because essentially you are issuing two coins on two different networks. You basically have a branched reserve bank, if you like, on two different, I guess, continents, right? So that to keep the coins like local, and you can keep the liquidation local as well. And so the bridge is one of the technical prerequisites you need to have. So once you've got the bridge, then the stablecoin originated from two places, then they can freely tradable, right? And then if there's any price disparity on any of the pools on two sides, right? So your original kUSD pools becomes aUSD pools, right? And then there's also aUSD pools on the Acala side. And then there will be disparity. But the thing is, the more trading value there is, not just on these two networks, probably on HydroDex or some other places, the more trading venues, the more opportunity for arbitrage. The more arbitrage, the better the price pegging will be. This is true. So one of the challenges that we currently have on Karura is, regardless how hard we've tried to open channels with other parachains, there's only one trading venue that's currently still on Karura. So with one trading venue, you have no price comparison, right? So you have no way to go in and out of a closed system. And then once you don't have, kind of like foreign trade, you can't keep the peg, right? So this is more like a bootstrap chicken and egg challenge. Is like you need to kind of like bootstrap yourself to a liquidity to a point where you're available in multiple different places. But if you're not in multiple different places, your peg is not quite kept the same. Your supply and demand is not quite in equilibrium all the time. So to answer that question, the bridge first. And then kUSD is going to be upgraded to aUSD. So from user perspective, there probably wouldn't be anything you would need to do. They would just turn into aUSD straight away. But the effect would be aUSD becomes available in multiple trading venue, and then it will help for liquidity and also the price peg, as well as other stuff along the way as well. And yeah, so that will probably be a high level of it, I think. And then we are still in a process of figuring out exactly the launch process, and at the same time getting feedback on this idea. So once we have a little bit more concrete, like what launches first, then we can also release those and folks can ask more questions, I guess. Yeah.
Yep. So that's the gist of that part of the proposal. We did just create a aUSD channel on our Discord. So what we're hoping for is for this to kind of begin people's thought process and discussion. And then we encourage you to come over and chat with us in the Acala Discord, in the aUSD channel, and you can feel free to ask questions, give us feedback. And then what this will actually lead to is a governance forum post, which also will invite comments, discussion. And then the final step would be to actually put this forward for a community vote around that.
Yeah, and another side effect or important side effect is also then your KSM can trade freely with your DOT. And also your KSM, if you're only KSM holder, right now you're excluded from Polkadot economy, right? So anything that launch on Polkadot, they're not launching on Kusama, you're kind of excluded. But with this approach, then if you use your KSM or KR to mint the Acala dollar, then you can, cross over to the Polkadot world and then participate in anything that happens on the Polkadot side as well, and vice versa, right? So this is really the economic unification that I'm specifically referring to, and this will help for both sides to kind of bootstrap, right? So bootstrap is actually just means that with, say, our product is aUSD, that just means more venues, more places that integrate and utilize the aUSD, and then subsequently it uses the underlying tokens, right, KSM and DOT, etc. And then this will also obviously subsequently help all the other parachains, regardless if you are a specific app, specific parachain, or if you are generic EVM chain, right? As long as you integrate with aUSD, then there are now various different type of asset to help you to power the liquidity there, which I think it's probably the most important thing right now for the ecosystem.
Mm-hmm. Yeah, another important thing to remember is just that with ACA and with KAR, these are accepted collateral assets that you can use to mint the stablecoin. So as a KAR holder, you're basically getting access to not only being able to mint aUSD on on Karura natively, and what Bette was kind of referring to as almost like a second branch of aUSD. But you also get access immediately with this aUSD to every use case in every dApp, leveraging aUSD pairs, payments, and so on, instead of having to maybe get kUSD, and then if you wanted to use one of these dApps that's integrated around aUSD, you would have to then swap for aUSD, then go in. So it gives you a more direct path into a whole ecosystem across both Polkadot and Kusama with aUSD, and a lot more power to your KAR tokens from what you can kind of unlock with that. Is there anything else, Bette, that you want to add to the to this initial part of the proposal, or do you want to get into maybe the second and third parts?
Yeah, we can go into the second and third part.
Cool. So you mentioned a little bit about governance, but as this proposal kind of displays, this is bringing together the economies of both Acala and Karura and the broader economies of Polkadot and Kusama. And with that comes some necessary kind of skin in the game and on both sides between Acala and Karura. So can you explain kind of the second part of the proposal when it comes to governance and how that might look to bring these two networks closer together?
Yeah, sure. So essentially, the focal discussion point is the stablecoin, right? And then people might ask, how about a DEX? What about the liquid staking, right? So I think it's important to clear that first. So like the stablecoin is basically the focal point of we've explained for the whole streaming here is why we're doing it and why it's important, right? Almost everything else we do is trying to help support the stablecoin protocol. Why do we build a DEX? Because that's how we actually improve liquidation efficiency. That's a necessary place for us to manage liquidation mechanism. That's why we build a pool. So we are not in the business of building the best DEX in the world. So there are already 2 other DEXs going to launch on Acala, and then there's also a few other parachain specialized DEXs going to be launched as well. So we're all in support. Like we want to put aUSD into all those pools and become the core asset, right? So hopefully that's clear. And then the second part is why do we build liquid staking like LKSM, LDOT? I think many didn't realize is like you actually borrow with a positive APR now if you're on Karura. So you are putting in your KSM in the form of LKSM, earning 17%, but the interest rate is way lower than that. So you're actually earning money while you're borrowing and then spending, right? And of course, we have to do our job so that the kUSD or later become aUSD can be used in many different places. So you have a place to use it other than just LPing in the one pool that currently the entire ecosystem has, right? So that's our job and other parachains' job to create more venues for utility, and that's why we're here for. So it's important to also understand the LKSM and LDOT has a very important role to play for stablecoin. If it weren't for stablecoin, we probably wouldn't do the liquid staking protocol. And then we also expect there are other liquid staking protocol that will come into our ecosystem. And in fact, we're going to import some of the liquid staking assets because down the track, there will be a lot of demand for aUSD once it's integrated into different places. Then we will need supply of useful assets and yield generating assets. So we are also doing that, right? So we welcome any different types of liquid staking assets to arrive at Acala and Karura and to support the supply part or liquidity part of the stablecoin. So hopefully that's clear. And also, why do we even build an EVM Plus? We are not a generic platform that is just gonna, like any other generic EVM chain. We are a aUSD focused chain. So even the EVM Plus that we build is so that we can support and build an ecosystem easier around aUSD on the Acala platform. So that's also another reason why we do what we do there. So and then I forgot what the question was.
We were going to go into governance. So Karura governance and Acala governance and how they can kind of join forces.
So yes, the reason I explained those three different protocols is like the governance is only specific to stablecoin because we are uniting the stablecoin here, not the other two, right? So then KR and ACA still maintain its own sovereignty in terms of managing its own networks, right? So when we say governance relevance is only related to the stablecoin part of the governance. So when you maintain the same coin, the same stablecoin, it's important to keep the risk profile the same. If for the same type of collateral, you're having different risk levels, then you're essentially maintaining a different risk profile stablecoin. So it's important to keep those stuff at the same level. So that's why once we unite the stablecoin, we also need to unite the risk management part of it. And the way that it might happen is there will probably just be one council that can make a collective decision on what those parameters would be, whether it will be a hybrid beginning, and then later on, once XCM becomes fully functional, we can do remote sort of governance participation from one chain to the other. That's another sort of implementation details that we probably can go into later. But how it might work is the Karura can then participate in Acala's financial council and then sitting there and then voting for different type of risk parameter changes and risk policy changes. Then it can kind of like collectively decide the risk level of the aUSD so that to keep the two in sync there. So that would be more like how practically a governance might work.
Yeah, let me share my screen real quick just to give people a visual, because it's kind of a new concept of being able to kind of combine these governance mechanisms. So you can see here, these are Karura token holders, and what Bette's explaining is essentially being able to give one of these voting positions of the Acala Financial Council access to the Karura parachain as a whole. So if there's a vote, the Karura token holders would vote, and then whatever let's say the vote is yes, that vote for that seat right here on the Acala Financial Council would become a yes vote from the entire Karura network. This is an early example. This could also, who knows what will happen in the future, maybe other seats on the Acala Financial Council will also be held by other networks. It'll evolve over time, of course, but it's actually really cool. It's kind of like meta governance where certain networks are also getting a voting share in other networks. Same thing will happen in the Polkadot world and Kusama, where even Acala, for example, could have a voting share in the Polkadot governance system. So this is all going to be kind of exciting to see play out over the next over the coming years.
Yeah, we're already doing that. So we have a Acala sitting on Polkadot Council. Yeah, Acala Foundation.
Yeah. Yep. And then, yeah, last wanted to talk about the treasuries. So as a lot of people probably know, last year there were some community events to essentially raise DOT for the Acala Treasury. So these were public events called the Build Acala, Ready the Treasury events, and this was a token event to essentially get DOT and then put that on chain on Acala to help the network become more self-sustainable, because as you probably know, Polkadot and Kusama both require you to renew this slot lease on the network in order to maintain a live parachain. One of the things a kind of well-equipped treasury allows us to do is to head into a future where we can self-fund these future slots. This is something that the team has been planning for the last 3 years, ever since even the white paper was written, planning ahead for what we'll actually do to renew that slot. You may see a lot of parachains actually printing new tokens, which kind of dilutes the token supply in order to pay for those future slots to give rewards out. This is something that we just didn't really want to do. We wanted to be able to maintain our fixed supply of 1 billion ACA and not have to print new tokens just to be able to fund these parachain slots. So that was part of the thought behind the Acala Treasury. Same with Karura, though. Karura also, of course, wants to become self-sustainable and start building up a treasury, especially given that these assets like DOT and KSM are interest-bearing or yield-generating because they can be staked. So the network begins to generate revenue for itself, as Acala already is. So yeah, maybe talk about the Acala Treasury and the Karura Treasury and kind of what we're thinking to propose to the community for how to also kind of merge these together a little bit more.
Yeah, sure. So in addition to, I guess, governance, another level of unification can be the treasury, right? So a portion of that Acala treasury can then be converted into DOT, I guess. Especially if we can do that on chain, that would be cool. So if you have
KSM, you mean?
Yeah, so
Yeah.
DOT and KSM, if both of them are trading against aUSD, then we can do that on chain, and then do the conversion and then donate that to the Karura treasury, right? And then Karura treasury can then use that, well, probably primarily for survival reason, to continue to kind of be able to rent the parachain, but also at the same time, it can also earn some yield on the KSM. But also, if there's more surplus, then it can also, if the treasury then can deploy that as liquidity into the pools to help. And this is also why it's important that the two unites into one. So now we can actually have multiple ways to create one type of stablecoin liquidity, right? So now the KSM can create aUSD liquidity, the DOT can also create aUSD liquidity, and both of them can actually funnel into different trading venues and dApps and actually help folks to adopt it, right? So yeah, so that will be another way, I guess, to unify, more to actually support the unification than anything else.
Perfect. So that's most of what we wanted to cover. That's kind of the 3 parts to this governance proposal. So the stablecoin unification of kUSD and aUSD, the potentially giving the Karura parachain a kind of a seat on the Acala Financial Council, and then last, potentially basically converting some DOT from the Acala Treasury into KSM, and then contributing that to the Karura Treasury to help out that network. Let's see if we have any final questions. I know we're getting right up to the top of the hour. Most questions are about wallets right now. Yeah, I guess Ronnie asked if Acala has plans to have its own wallet. And then a lot of people have been kind of discussing like other options for wallets, like in other ecosystems. So
we actually integrating with Talisman this week. So I think it would be great, like folks try their wallet out and give some feedback, because they actually integrated Acala and Karura first, and they aim to actually create much better user experience. And yeah, so that's one. And then we are also working with a couple of other wallet providers as well. Yeah.
yeah, I know Subwallet is another one who's building a new, better version of Polkadot.js. So it's exciting to see new options coming out for sure. Oh, so I guess this is maybe a good time to leave people with something to look forward to. So is there any updates or exciting kind of Acala related things that people should be looking forward to?
Yeah, so like
two?
ACA staking is coming. Yeah, ACA staking is coming. And then, yeah, folks ask about, ACA is non-inflationary. How would you be able to do staking with a non-inflationary token? So for those of you who didn't have the context, right? So for doing any staking out there, I think whether they provide any usage or not, mostly, for proof of stake staking, you're actually inflating the monetary supply, so that you can give those inflated token as incentive for the validators to provide a service. Yeah, so for Acala, we opt for a different route for various different reasons that won't repeat, but we are a non-inflationary token model. So there's a fixed supply. And then also as the system goes, you pay fees and there's different lockups. So you actually goes deflationary over time. And then the ACA staking is more of a pilot that you're going to see maybe in the next few days coming out more information. But the way we do it is we use surplus that we generated, some of the reward surplus that we generated, and we're going to buy back some ACA. Instead of normally, you could just buy back and burn them, or you buy back and hodl them in the treasury and then for future use. We thought it might be a good opportunity to try this model of for reward those folks who actually lock up their ACA, like through staking, removing themselves from circulation, and then we can use the buyback token to reward them, and then have a positive sort of reinforcement for this type of like sharing the reward, but also helping the entire economy as well. So yeah, it's just a pilot, so to tease out to see what it's like. So yeah, so look out for some information out there soon.
Awesome. Well, I guess that's a good thing to end on. We'll leave people with that. Like I said, meet us in the Acala Discord if you want to come discuss this aUSD kind of unification proposal between aUSD and kUSD. We welcome any questions or comments, proposals, and the same thing goes for when this gets put on the Acala Governance Forum for another forum for discussion. So thanks everybody for taking the time. We'll also upload this to our YouTube if you want to rewatch it or share it. And yeah, we'll see you next time. Bye.
Thanks, guys.